You're ready for a new week. You're excited. Maybe you've just had a losing week, so you're ready to do better this week. Maybe you've had a winning week, so therefore you want to make sure you continue your win streak, whatever the case may be. You're excited, you're ready to go, and you want to be the most prepared you can be. There are so many things we can do to tackle the markets fresh for a new week ahead. And in my 8 years of trading, trust me, I've seen it all and even done it all myself. And I want to show you in this video, after almost a decade in the markets, what has been the most effective for me, and what I think is truly needed to actually be profitable versus what is just fluff you see on social media of gurus saying you need to do this and that to be a profitable trader. So let's get right into it of what is the perfect routine to have on a Sunday night to prepare yourself for Monday and a fresh trading week ahead. So what I'm going to do is take my iPad and I'm going to draw some scenarios for you. It's important to mention there is the category of things that you can do for your mind, and of course controlling your psychology, not allowing the circumstances of the week before to affect your performance and mind, and just coming to your trading desk being stoic, ready and prepared. In previous videos I gave the analogy of the mindset of a trader. What's the optimal mindset to have? You need to be like one of those deers in the savannah in Africa. They are calm, they are peaceful, but they are always alert and ready to run if they hear any noises of a lion or any movement in the distance. But they are neither completely stoic and relaxed, and they are neither in an adrenaline state with a fight or flight and ready to take action. They're kind of in a hybrid between the two, where it's called calm but alert. And therefore anything you can do to help yourself be in this calm, alert state, whether it be journaling and meditating, whether it be doing yoga, stretching in the morning, whatever that is for you, go ahead and do that. That's fine. But there's also some things you need to do that are technical based to prepare yourself for the markets. And that's exactly what we're going to talk about in this video. So when it comes to doing your analysis on a Sunday night to prepare yourself for Monday, there are so many things we can do. And I think level one, which I want to talk about, level one looks like you have your eyes all over the market. You have 20 currency pairs you're watching, you've made a short list and you've set limits or you've done POIs on all of them. That's what I think the beginner trader does. They are scattered, they are all over the place, they're looking for every single opportunity and they want to capitalize on everything. In my opinion, it's much more fruitful to just focus on 1 or 2 currency pairs. That's all you need, to be honest. You don't need to watch 20 currency pairs. Level 1 also includes a top-down analysis, and that's something typical we've all seen. You start on the monthly time frame, and then you go down to the weekly, and then you go down to the daily, and you're spending 10 minutes on each one of your 20 currency pairs doing a full macro breakdown. You're writing notes, you're drawing lines, you're putting on indicators, all of these things, and then you're coming to the market with biases. You're thinking, okay, GBP USD is going to be bearish. EU is going to be bullish. CAD JPY looks like it's going to do this. So what happens when you come to the markets on Monday and you see price action develop that goes against your preparation the night before? Well, you might still stick to your guns, stick to your bias, and make a decision based on ego as opposed to what the market is showing you. Remember, there are so many people that are, especially in the level 1 category, that would rather be correct, rather be right than actually make money. In my opinion, a profitable trader is one that is not coming with a bias or a preference. They know that they are completely wrong and the market is always right, and therefore they will not predict. They will just simply react to what the market is showing and utilize their confluences to protect themselves. That's what a real analyst and trader does. Now, let's move on to level 2. Now, a level 2 trader is doing slightly better than the level 1. They're not going to be all over the place and they're not going to be putting sell limits and writing notes and all these crazy things, because they'll realize the reality of being a profitable trader is having clean, hygienic charts. The more simple your chart is and more relevant information you have, the more profitable you will likely be. Have you seen those charts where people have like trend line, counter trend line, higher time frame trend line, M1 trend line, Fibonacci, support, resistance, EMAs. Now imagine doing that across 20 currency pairs. So another thing that level 2 will do is refined watch list. Sorry for my handwriting, but refined watch list means they'll probably refine it down to 3 to 5 currency pairs. And that's significant progress because you're not looking at 20 pairs. Next is selective time frames, usually daily time frame, H4 time frame, H1 time frame, M15. That's kind of like what a level 2 trader would do. Now let's talk about a level 3 trader. He's going to be evolved from all of these. And I think this is what we should strive to have. The level 3 trader is going to be focused. He's going to be focused on 1 or 2 pairs. He's also going to have those clean charts. And all he's going to really do is identify the main push, high time frame directional bias, intra-session main leg, where we are within those legs, and then most relevant POIs. They're not going to be doing all of this complex analysis because they'll frame themselves, and I'll show you in a second with real chart examples how to exactly do this step. They're also going to have no bias predetermined. They're not going to care if it's going to be a bullish day or a bearish day. All they're going to know is if it's going to be bullish, this is the map. So they'll build roadmaps. And if it's going to be a bearish day, they will also build roadmaps. And then they're also going to have key time frames, not just selective time frames like the level 2 trader. They're going to have key time frames. Those key time frames will be H1/H4. No need for the daily, to be honest, because the daily and the H4 usually show the same supply zones, just bigger and smaller. So those zones of relevance will be basically the same. Then you have M15 for intra-session POIs and intra-session structure. And then you have M1 to identify inducements, build-ups, time-based manipulations and reactions, and really seeing those M1 nuances and tendencies. That's where the detail is, and that's where the entries will be. You just have these basic timeframes, and then you see which of your roadmaps is going to play out. So when it comes to the idea of a roadmap, let's come up with some ideas of what some roadmaps could look like. So it could look something like this. We have a bearish price action on a higher time frame. Okay, so we mark out a higher time frame supply zone. When we have that higher time frame supply zone, price then does something like this. So we're doing our pullback all the way to that area. And what are we reading? Build-ups, inducement, mitigation of demand. We have build-up, inducement, leading to a break of structure out here. We're getting manipulations. So we're reading the normal languages of price action and seeing who's in control. And then eventually price will do something like this. So let's say this is our new week. So then what we'll do is we'll let Asia range develop. The Asia range is likely to be consolidative. We have our Asia range. And what we are going to do is wait for London Open to make a decision. So when we have seen how Asia plays out and we come to the markets, we are looking fresh on our laptops or computers for Frankfurt Open. What are we going to do? We have a few situations we can have, and this is how we'll prepare. We have our main supply zone. We know that is relevant. And we have the most recent demand. Now we know overall we are bearish from a higher time frame. So one of the roadmaps is bearish. But that is not the only thing that can happen. So we're going to build out roadmaps where we have the most recent demand. And this will be an intra-session demand or an intraday demand. It's not going to be focusing on these ones necessarily, but we'll mark them out. So we know that this area right here led to that push out and led to that break of structure to make the high high. So we know that this is a relevant area. So I'm going to call this immediate demand. And then we have demand intraday. Okay. And then our higher time frame demand is likely to be somewhere after we make a lower low. It'll go back to a demand area on a higher time frame. That's not for today. That's not for this week. It'll take time for price to arrive there. But for now, we don't really need to consider it. We have our immediate demand. We have our intraday demand. Then we'll go to our immediate supply, which could be something like this. And then we have our higher time frame intraday supply, which is pro trend. Okay, so these ones will be counter trend, pro trend, pro trend. So therefore, basically doing a read like this, we can start to have our preferences. We would ideally want to see sells because we know that from a structure perspective, lower high to lower low, we would want to see price come up, do a lower high, and continue to make a lower low. So that's our bias, but that's not what we're going to be factoring in and only doing and only looking for. We are not going to be setting limits or anything like that. We are going to come to the market fresh and we're going to be reacting to any scenarios. So what I've done right now is identified relevant POIs. Next, I need to identify relevant pushes. I have this relevant main push on an intra-session, and I've identified the origination point and the decisional point. The decisional that led to a break of structure and the origination point that started the move. So I found my intra-session main push that I'm going to be trading within. That's my dealing range. And then I also have my higher time frame pro trend. That's going to be the main leg I'm within and then my main push. So let's actually do it in the relevant colors. We have our, I'm going to say main leg, and then we're also going to have our main push. Okay, so we know that our main push is going to lead the completion of our main leg. This main leg was the bearish pro trend, lower low. Then we had our main push that enabled the continuation of our second main leg. That's how we're going to be determining our high time frame bias and how we're going to get there. But now let's build daily cycle roadmaps. So when we get into the details of it, we need to identify what are the potential scenarios on how price can react. How can price get to our preferred areas? So let's do it in a blue. So Frankfurt Open, price comes down and it does something like this. Okay. So we're thinking, okay, well now we have one of our roadmaps playing, which is potentially coming to this area. Then we see, okay, price comes down, starts to give this. So we see it took all these equal lows, did a run of liquidity. Smart money traders are interested because it's one of those smart money candles. Then that becomes an order block. Smart money traders are looking to buy. So then price comes higher. Okay, maybe it's going to be a buy day. Then we see, oh, this is a nice smart money zone because we have this run of liquidity. And then this becomes a nice trend line. So smart money traders are going to be looking to sell. So then we see, okay, price comes into that zone. And then what does it do? Gives a reaction like this. So now smart money traders are going to be entering. The smart money traders here are buying, then they are selling. Now what do we know? We have all of their liquidity available. Liquidity in this area, we have liquidity in this area. If price continues, it does something like this. It does an inducement of the immediate supply. So we don't just jump in, and then it does a London Open. London Open. So now we've come to our higher time frame supply. And then we want to see a reaction from there. We then have our London Open time-based manipulation. We took an inducement of the immediate supply plus smart money trap. London Open, we get a confirmation type of an entry. Let's say that one of our entry models. And then we come into the sell cycle, and then we take out these potential early buyers. So we give them a reaction, take them out, another inducement. So we have a roadmap of inducements: liquidity pool, liquidity pool, liquidity pool, liquidity pool. And that's how the market is going to go. It's going to entice people to enter and induce them out. Then we have all of these smart money traders going to be getting into that zone because they saw that led to a push out, bullish reaction. Price is going to come in, give them a reaction, induce them out. That is one of the roadmaps we're getting. And then now that became our London trade, inducement of the day, London push coming into our immediate demand, let's say. And then we might get New York open, New York window, price then does a reversal and then gives a bullish trade, something like that. So that could be one of our roadmaps. But to be honest, there are so many more roadmaps we could have that is going to be based on time windows, based on daily cycles. So just to draw some of our daily cycle variations out, because there can be so many roadmaps, you can have price doing manipulation into that supply zone on a high time frame and then immediately become a sell. That could be one option. Option number two could be price gives a fake reaction, manipulation, and then makes a lower low. Option two, you could have price do something like this. It just comes lower, traps people in, goes to Asia midline, and then becomes a sell. That could be an option. That's option three. Option number four, price goes low first, comes to the immediate demand, grabs liquidity, comes to the higher time frame supply, and then goes lower. That could be option four. Price could also go lower, induce that immediate supply, come to the intraday demand, maybe even do a inducement of that level, continue higher, induce all of this out and do a New York reversal to make a lower low. Could be another option. That was option five. And when you start to understand daily cycle variance, you can build out all of these roadmaps for the sell cycles, but then also for the buy cycles where price could go low and then go and make a high. That could be one cycle. Or price could go low, do a false reaction, and then London reversal, and then New York continuation. Could be another buy cycle. So you'll start to see you're building roadmaps of all of these potential sell cycles and buy cycles. But we're not really coming into the market and saying, oh, it's going to be bearish and only bearish because we have a higher time frame supply and bearish structure. No. We have to be factoring our relevant POIs, immediate demand and immediate supply, and the zones of manipulations, smart money trap zones, and then higher time frame supply, higher time frame demand. And then we have our main push and main leg. And then we have time-based manipulations. And then we have daily cycles to have our roadmaps. And then when we come to the market, we have all of this information in our head and we're not just picking one and hoping for one. No, we're going to watch and we're going to react to which cycle is going to present. We're going to be monitoring price action, seeing our key time windows, following the inducements, following the manipulations and seeing which day is today. And then we identify, oh, today's going to be a bearish sell cycle in our London session. Then I've identified what could happen. I have decided a bias, but then I need my entry criteria. I need my confluences to trade my idea. That's another case in itself because you can have ideas, but it doesn't validate an entry. And your idea does play out, but you shouldn't have taken that trade anyway because it didn't fit your plan. There's one thing being an analyst, another thing being a trader. So when you have an idea, you found a roadmap, you found a daily cycle, then you need execution protocols. You need a hierarchy of confirmations, a confluence set to justify when an entry can be. And that will be backed by data. So this is how I would prepare for the week ahead. I wouldn't really care too much about what the level 1 and level 2 traders are doing. I'm going to be focusing on what I think is important based on price action as I've shown you with these key metrics and key points that I utilize that are going to be far more important than support and resistance and trend lines and Fibonacci and indicators, or more important than just a higher time frame directional read. No, we can get so much more detail, so much more advanced and so much higher level as an analyst. And that's how you should be preparing. So if you would like to see me do this live in action, if you'd like to see me do this on price action, not just on my iPad, but actually showing you on a Sunday evening how to do that. What I have is I have a free trade club. It's a free club that anybody's free to join. It's a private Instagram account where I'm going to be doing Instagram lives, where I'm going to be doing my daily trades, daily breakdowns. I'm going to be doing Q&As and all of these things. And in that private trade club, I'll probably go ahead and show you how to do it this Sunday prep and how to do it on price action, ready for the week ahead, and show you how to complete these roadmaps and actually apply it and then show you the trades of the week. If you'd like access to this free trade club, you don't have to do anything. You just have to request access. It's going to be a Waqar Asim Unfiltered. That's the account name. Just make sure you're not a weirdo. Don't have a fake account. Don't have a ghost account. I want to see real people, real traders, and my team only accepts real traders and real people. If you're a guru, if you're a mentor, if you're a ghost anonymous account, you'll be rejected. But the real traders that make it through, we're going to have a lot of fun and we're going to have a lot of Q&As and analysis. And ladies and gentlemen, as always, thank you very much for tuning in and watching. Let me know what you enjoyed from this video in the comment section, and I'll see you in the next one.